Hey everyone, my name's Andy. I'm getting a lot of questions about, should I buy this? Should I buy that? Now I can't give, this is all financial education. That's all it is. I can't tell you what to do, but I can tell you strategies. So buying stocks, what strategies do I follow? And I'm going to tell you kind of how I buy stocks. And maybe this will help you buy yours. So we'll go in here. We'll call this buying stocks. So I want to let you know what cost averaging is. So dollar cost averaging, or DCA, is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on their overall purchase. Dollar cost averaging is also known as constant dollar plan. Now I do it a little bit different. So here's Ely Gold, and this is one of the companies that I've been cost averaging in. In all of the circles is where I purchased Ely Gold. Now you can tell that some of them didn't work out as well, and some were very good. So I purchased here because it touched the line. I was like, if it continues, maybe it'll go higher. I think I purchased down here to like where this line is, like all in here. So I didn't show those, but I purchased here and then it broke down. I was like, well, okay, I'll wait for a bottom. It shot up and then I was waiting for the pullback and I bought in here. Then it came down. I was like, okay. Came back up. Oh, it's going to break. I bought there. Didn't break. Damn it. Then it came down here and I saw this bullish engulfing. Buy, 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 buy. Came up, came back, bought again. And now I'm just holding on. And hopefully we're going to break through this line here and it's see ya, wouldn't want to be ya. But that's what I'm cost averaging in. I'm trying to read the charts using technical analysis. And you can see where I'm purchasing on this one particular chart here for Ely Gold. I like Ely Gold and I know the valuations are very cheap and I know the market conditions, I know the ratios, I know all this stuff, and that's why I'm buying it. So technical analysis here, I'm overly aggressive and cost average in using technical analysis. That's the way I do it. Most of the time I don't wait for chart breaks and I cost average in when the ratios are cheap. I also buy based off of chart pattern breaks and I look for reversal patterns and momentum changes. Bullish engulfing and piercings are some of my favorite chart pattern moves. And I'm going to show you what some of those look like. So here's Norilsk nickel. I'm going to show you kind of what I did on Norilsk. Norilsk has these two big patterns here. This was the one I was focusing in on in the beginning. And you can look at my market updates back in the day and you can even see I was telling everyone real time. Right when it broke this pattern here, I bought it. I was like, boom, right on the chart break. And then I haven't really bought back in, but I'm going to zoom in on that and show you kind of what Norilsk nickel and what I look for. This is a bullish engulfing. See how the candle of this one engulfs the one before it? That means it's a reversal pattern. I would have bought right here, but I didn't see it at that time. I actually saw it. I think I bought right here on the break because it came down here. Yeah, it was right in one of these 2 days here that I bought. Came back, it pulled up, came back. Remember that back test, what I always talk about. Pulls up, came back, bullish engulfing again, boom, higher. Now it looks like it's probably going to pull back a little bit, but this is where I'd be a buyer. Here and here and here on the break, all in here is where I would be buying. I would be cost averaging in. I'm looking for chart pattern breaks. This is a chart pattern break, and I'd be a buyer. And notice how we got another chart pattern break and it flew higher. Notice that. So here is another VALE. This is a massive, massive pattern. Look at, this was like 2000, early 2000s. You could consider this a 20-year pattern possibly. This is ridiculous how big these patterns are. It broke to the upside and I was like, oh my God, this is so on. And I bought and bought and bought. I cost averaged in there. I also bought on this chart pattern break here at like $4 right here. I bought all in here on that break. Man, I felt so good, guys, buying that down there. But it took me a long time to get back up here, and I saw this break. I was like, I got to get in big. So I got in big. Here's Beidou, and I know this is a tech company, but this is a tech company that I own and that I watch. I'm not recommending anybody buy this. I'm just showing you the chart pattern breaks. It broke to the downside. I was like, damn it. So it came all the way down, and it broke to the upside here, and I was like, on like Donkey Kong. So I started buying, and here it is flying higher. I actually think it was up like 8 or 9% today. But there was one that I really like because it pulled back like this, and I like buying on the pullbacks. Here's Rio Tinto to show you another one. whenever you have these big chart pattern breaks, see all this resistance here? 1, 2, 3, kind of 4, 5, 6, 7. And it was like, man, I'm sick of doing this. Boom. This is a reverse head and shoulders if you want to know too. And this could potentially, see it's getting stuck right here in this other area. See how the resistances play into this? Some of this is technical analysis just to show you kind of how charts move and where they get stuck. And eventually this thing's going to go even higher. It's probably going to break this all-time high eventually. I don't know how long it's going to take, but I mean, this could really get revalued pretty quick. So buying stocks at bottoms. This is another thing I want to go over so everyone understands this on the channel, because I got a lot of new subscribers. Some companies, when you're buying them at the bottom, are pretty illiquid. And what illiquid means is that there's not a lot of buyers and sellers. So you have to really be careful on how you put your orders in. Make sure to use limit buy orders. And what is a limit buy order? A limit buy is, it sets the limit of the buy order to an amount where you set the upper limit to buy. So if you put $1.50 in for a stock, the stock has to be below $1.50 or lower for that order to execute. So I don't want you to get caught where you put in a market order and the stock is at $1.50, but the next asked price is like $1.75 and they fill you for $1.75 when you could have just waited an hour and got the stock for $1.50. So if it's less than the price, then you purchase the stock. It doesn't allow someone to jack the price way up on you. It protects you from that. A buy limit order does. And if you guys have questions, leave it in the comments section if you need more explanation than that. So the conclusion here is I use technical analysis and ratios for value to purchase companies in certain sectors. That's how I do it. You saw kind of how I cost average it in where I buy on using charts. I look for chart pattern breaks or solid reversal patterns in the charts. I cost average into positions and I use limit buy orders when purchasing. So by knowing all of this information, by using limit orders, by looking at some of these chart patterns that I'm putting in front of your face, it'll give you a little bit more confidence on when to purchase and that you're getting a good deal. If you know the valuations, you're obviously going to be getting a very good deal if you know the valuations, because all these are cheap. And you know how to purchase these stocks. You are now becoming more educated on how to transact and buy stock. So hopefully you can use this information to make better informed decisions about your investments and to make better buy orders to ensure that you're getting the best value and price. If you guys like this content, hit the thumb up button, subscribe if you haven't, and I appreciate you guys listening. This is Finding Value.